Hello and welcome to the Wendell Effect. This is Brandon Wendell, Chartered Market Technician, with you again, talking about sector rotation and what's going on in the U.S. stock sectors for the week of May 14th, 2023. We'll go ahead and kick this off. Just reminding you, we are not broker-dealers or investment advisors. We're looking at this information from an educational standpoint only, not telling you to buy, sell, or hold any particular securities or giving any personalized recommendations. Past performance is no indication of future results, and there's always the possibility of loss in the financial markets. Keep that in mind. Don't trade with money you can't afford to lose. Also, we're not subject to trading restrictions, so we get a position in security initiate one at any time. Please email me if you got any feedback or questions or things you'd like me to talk about. You can find me at brandonwendell.cmt@gmail.com. Also, I'm on Twitter at TraderBdubs. Pay attention there because I'm on there quite a bit. And you can also please hit like and subscribe. That helps us out a lot. And also, if you want the notifications to let us know, or let you know when we post new videos on a weekly basis here. So we're going to go ahead and jump right into it and look at the stock analysis or sector analysis for the week of May 14th. Taking a look at the last 6 months to the end of April, that's when I did my last video. Last week I was on vacation, so I didn't do a video, but you can see that we had a lot of gains in consumer services or communication services and technology. Well, taking a look at the current 6-month look back, things have changed. You take a look, as you went from 22%, 17%, to 1999 and 13. So we're losing gains that we had this year in the communications and technology sector, and we're actually gaining again in the consumer staples, utilities, and healthcare. Again, go back. Let's see, 7.11, 3.93. Actually, no, I take that back. We lost on everything. Everything went down a bit to May 12th. So we're getting a little bit more bearish. Looking at the last month. Again, ending April 28th, this is what we were looking at. We had a pretty bullish month. Well, now look at May. Looks a little different, doesn't it? It's kind of rolling over, getting a little bit more bearish here when it comes to these ETFs. And that's to be expected. You've heard the saying, maybe you haven't, but I'm going to tell you, sell in May and go away. Typically, the summer months are the doldrums. They do not perform quite as well as the other months in the calendar year. So keep that in mind as we look forward into what's happening for the markets. Well, looking at XLY, nothing happened there. You can see that we just went sideways, and I kind of predicted that. It was just bearish and not bearish, it's just sideways. We had no momentum. So really you don't want to play the sector unless you're day trading it. The communications, this is the weakness we saw. We had a negative divergence. We pulled back. However, when we pulled back, notice we didn't go below 40. That's still bullish. And we made a new high. Pulled back yet again, not below 40, but here's the problem. We're putting in another peak right here, almost the same high, but we're doing it with a lot less momentum. And that's showing a bit of weakness. This could be a double top. And actually, I didn't look at the chart here. Let's do that. So I didn't look at the chart as I was saying for the double top, but if it is a double top, kind of looking at this is for the neckline right about here. Let me change the color of that. Anyway, you can see first peak, second peak. Again, we've lost a lot of momentum. So if that's the case and we start dropping, you'd measure from the top of the second peak to the neckline. And let me go ahead and change that. There we go. And clone it, because that measured move would be your target from the breakdown point, which would be your neckline right there. So that gives us a demand zone, or target, not demand, a target somewhere around 54.70, right in that area. Okay, and you can see that's kind of where we had a little congestion in the past, so keep an eye out to see if that actually does happen, where we start to turn over. We won't break the neckline this week, most likely, but you should see that pullback, because again, we just don't have the momentum we had, especially if we're coming up to the same highs that we had before. So going back to where it was, XLK technology also losing momentum, not a double top, but you can see we can't seem to push through the supply very well, and we're losing momentum. That's suggesting we may have a rough week of it, just kind of going sideways this week. I don't see us pulling back, but I do see us moving sideways. Looking at materials, we have pulled back. We've been making lower highs and lower lows. We had divergence here at the supply, so obviously we pulled away as we had lost our momentum, and we're not really bearish. Even though we're making new lows right here, we can't get below 40. That's suggesting we may start to base and go sideways in materials this week. So I would look elsewhere for good trading opportunities. Looking at the energy markets, we might actually get a little bit of a rally. I know we've been talking a little bit about inflation in the markets and Jerome Powell going out there and doing things, raising rates and maybe easing on the raise, but we might get a little bit of a bump this week. We have a positive divergence where prices made a lower low, but it did it on less momentum. That means we should get a run to the upside to retest this supply at 83.72. I don't know if it'll happen this week. It will probably get a small pullback and finish right underneath 82 this week. Looking at consumer staples, they pulled back after a rally. However, we're not changing into bearish momentum. We just had a small pullback before we go higher. That's all. This is really kind of a bull flag, although we didn't have a great flag pull moving up. But if that's the case, we should be able to continue up. Probably not in the next week, but maybe in the next month. Our target would be 80.44, that overhead supply. Look for a possible breakout of this sideways motion. If you get a breakout, maybe a retest of 77.25 as a demand area, or not really demand, but that top of that flag, if you will, just draw lines around it. Heck, I'll just do it. Go out to my chart, XLP. What we're looking at is this. I'm not going to bother extending everything right now, but you can see that it's kind of a little flag formation. So if we do break out to the upside here, well, usually the flags are half-mast. So there's your pull as you come into the flag. Then the breakout, depending on where it is, should take us up in that supply. So what I was saying is if you get a breakout to the upside from this, you wait for closes above and then the pullback to buy. That's it, and you just target the overhead move. And it may have a couple little targets along the way. It depends on, let's see, if I go from the beginning of this impulse up, the correction down, now we have, well, target's pretty close to the supply, 79.74. So keep an eye out for that. On to the healthcare sector. This is also consolidating right now. You can see we actually got a bit of a change in trend. We made a high right here where we're not above 60, so this looks a little weak. I was expecting it to continue to push up towards its supply and targets, but it doesn't seem to be wanting to do that. I think another week of sideways motion, maybe even a drift a little bit downwards towards the previous low 130s in store. Looking at the utilities, unfortunately, we lost momentum here. We're not moving down much. We only retraced 38%, and we're hovering right around 23% retracement, but we're certainly not getting that bullish move that takes us higher. So I think we're going to continue to go a bit sideways, if not maybe to retreat back down to 67.44. Utilities usually do not perform very well in a rising interest rate environment anyway. Financials, oh boy, they've been pretty rough, haven't they? All we're hearing is about more and more banks failing, so obviously we're in a bit of a downtrend here. We did a 50% retracement after the first round of banks. I think that was Silicon Valley and everything. So we're getting more news on other weaknesses and continuing push to the downside. It's not dropping as dramatic as it did before, but this is showing a lot of weakness. Keep an eye out. If we break this low, we need to have more momentum than we had when we made that low. If we do that, sorry, wrong one. If we do that on the RSI, we make a new low. When we break the low, then we should be able to continue down to 29.91 easy, if not even lower. And finally, real estate, really not doing anything. It's stuck at that supply. It retraced off the lows, but there's no momentum. Look elsewhere for this week. It doesn't look like it's going to be a good performer. So, looking at some of the trade ideas that we've had, kind of following up, EA was a long opportunity, unfortunately never pulled back into our demand zone. Okay, and this was going in the end of April, and I think the follow-through, unfortunately, you can see when the earnings came out, we had a little bit of movement with gaps, but it didn't do anything for us. Didn't get us into our entry, didn't really rally, so we're going to give up on that one. Time has passed, it's beyond. XEL, same thing. We had a potential for this to pull back into our demand and waiting for the rally. Unfortunately, this one did hit. But unfortunately, it's not really bouncing very quickly. You can see that, yes, we held the demand zone, got in, if you did, and it's a little bit positive, but not really going anywhere. And that's the problem. We're fizzling out. So keep an eye on this one. I don't know if you want to move your stop up to break even necessarily. It might be a little premature, but unless we get more momentum upwards, this is going to just stall out and go sideways. So keep an eye on that XL Energy. MCK, McKesson Corporation, we have earnings that were supposed to come out on May the 8th. Okay, this was what we were looking at on the 30th of April when I put out the trade idea. Well, it was positive for the earnings. Unfortunately, you can see we just missed entry. There's really not much I could have done with that. We were looking at this back here at the end of April. So that's where we were, and the prices did start to drift towards the demand. Unfortunately, just didn't let us in. It was a good idea, but just couldn't come to fruition. ExxonMobil was another one we were looking for a pullback for, or not pullback, but a breakout on the earnings. Right there, you can see there's a breakout, and unfortunately, it was a false break. You can see that when we made that high and close, we had a negative divergence. That's why I pay attention to things like that. So right here, you have, this is the picture. You can see we had a breakout, just like we did before. And that's why I wait for the retest and signals to let me know it's time to go long. But we did not, when prices made a new high, we did not make a new high momentum. That negative divergence let us down. And it told us not to go long. So hopefully we weren't caught in that. So looking forward now for new trade ideas, we have EPAM systems 100% of the time over the last 10 years. Now remember, that's not a guarantee it's going to happen this year. But for the last 10 years, this has been a winner. From 14th of May to June 6th, 7.84% annual return. Or not, I'm sorry, average return. So looking at EPAM, first of all, there's two demand zones to look at. This is going back a little bit. In March, there's two 4-hour demand zones. We have kind of rally-base rally at 199.25 to 207.50. And we have another one right here, drop-base rally at 184 to 190. But they're all both inside of a daily demand, which is, it doesn't show here, but that's a daily demand from 168 to basically 201. So your choice of how you want to play that. On the 4-hour zone, since we have two zones, typically if I take the upper zone, I only do it with an entry either inside the zone as I'm seeing it turn around or confirmation as it leaves the zone. If you want to do kind of a set and forget with a limit order, you only do it on the lower zone. And then I have my supply for the gap closure and then the supply zone above for the two targets there. So that's what I'm looking at for this week going forward. I have another one here, I believe. Nope, I'm sorry, that was it. It was kind of light for the ideas. So if you got any questions about anything, please send me an email, brandonwaddell.cmt@gmail.com. You can also find me on Twitter @TraderBDub, and I'll be doing some follow-ups this week as far as the markets and info. And if you could, please help me out by hitting like and subscribe for our videos, and also maybe hit the alerts. That way you get notified when new ones come out. I will talk to you again soon. Until then, trade safe, trade well, take care, everybody.